Hi trader, welcome to the weekly video on the Forex market, taking a look at reversal patterns at support or resistance. In this video, first of all though, be aware that this is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence and contact appropriate entity. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's start with the euro dollar. Looking at the 1 hour chart, in my wave analysis of today, the 6th of February, I was already hinting at the fact that there could be a head and shoulders pattern right here, and price indeed moving away from that right shoulder to the downside. There was also divergence between these tops. Plus, of course, price was also making, in a way, a bit of a rising wedge like this. If you connect these two tops and these bottoms, you can see that price was struggling to continue like this. So, not surprising here that price is moving to the downside, but it still has to break one important support level, which is this rising wedge bottom, support trend line, and the S1. Let's see how much steam it has. Today, if it reaches the S1, makes, for instance, a bear flag, and then breaks that bear flag, there could be a space right down to S2, maybe later S3, as it breaks lower and lower. On the 4 hour chart, there was also, basically for my, or 1 hour chart I could say, there was a retracement to the 78.6 fib, as you can see. So this could be basically a correction or a reversal. Let's see, it all depends on how price reacts to this 106.75 level, which is the S2 and the minus 272 target. If price accelerates and keeps pushing below that, then this is probably going to be a reversal. If, however, there's a strong bounce at the 272 target, then this is probably going to be just a retracement. This could be an ABC zigzag like this, and perhaps the uptrend then continues again. So very key, in my opinion, is how price responds to the minus 272 target and S2 pivot point at 106.75-ish, 106.80. From a 4 hour perspective, we also not only have this fib that was important, but we have also this fib. Still, price is retracing this particular swing high, swing low, and it has hit the 88.6 fib twice and finally turned around at that fib. It turned at the 78.6, at the 61.8 fib, at the 50, and the 23.6 fib. So it's a very strong, often used Fibonacci retracement level. So is the 88.6 fib going to be really the turning spot? That all depends on if price breaks the support line, and then, as I already said, how much momentum will it basically pick up as it falls. If it breaks below this support line, if it breaks below these bottoms as well, those are two support levels that are very important. 106.80, as I said, and 106 itself, then it could really start to fall more and more. Basically, it would need to break below this support trend line as well for further downside. In that case, this uptrend that we've seen for entire January, in fact, could finally be over. If not, and if it does bounce, then who knows? There could be another uptrend continuation, one more choppy push up to retest 108.70, 108.50, and if it breaks above that, maybe even up to 110. Now, for more updates on the euro dollar and other currencies, tonight, Nenet has its usual weekly recap. Tomorrow and Wednesday, I take a look at price action and patterns and Fibonacci and waves, looking at live markets in both sessions. So looking forward to having you there. We also have educational webinars, money management, and also how spread impacts your trading on Wednesday evening and Thursday evening. All right, the next one on the list is the pound USD. It looks like there is a continuation of the downtrend at this moment. We already had strong momentum here visible. So I was keeping an eye on basically this support trend line right here and this resistance trend line like this, trying to see which one would break. If the resistance would break, I would have considered that to be a correction back to the fib, and I would have put a fib from here to here like this. Now price in this case is actually continuing lower, so I think that basically we're seeing probably a last fifth push still, and it could go within 5 waves. So there could be 1, 2, and then this could be a 3, and then a 4, and then a 5, to finish a higher 5 of the 5, and then I would expect an ABC correction to the upside. So how far could this push? Well, the first little small movement here was about 46 pips. So I would expect at least 46 pips move here. It already did that. So it will probably fall down to the S2 or the S1, make a small little bear flag, break down to the minus 272 target eventually. That's maybe the end spot. And then I would expect an ABC zigzag from that level. And then I would expect after that ABC zigzag, a renewed downside to emerge. So from my perspective, if an hourly candle like this stops or a 4-hour candle like this closes near the low, there could be, on an intraday perspective, still one more push today or tomorrow. Then I would expect to bounce in 3 waves, a push up. There has to be momentum here, a zigzag like this, and there could be a turn at the fib, like a 61.8 fib. If I put the fib from here to here, like this, there could be a zigzag up to the 38, down to the 23, or the even lower, and then up to the 61.8, and then a downside again, down to this target. This is roughly what I would be expecting this week. But let's see, I always use price action, well, not always, but most of the time, I use price action for confirmations to see if my analysis indeed plays out as expected. More on that, of course, tomorrow as well. Dollar yen, basically at major support, but if it does break the support, it could fall down to 112, 111.80, where there's a big fib on the daily chart. Or it could still make a correction higher if it breaks above. I would probably say breaks above this resistance trend line like this probably. It could be, and the pivot point, there could be a rally to the upside, to the R1, then maybe to the R2, and then I would expect another retest of the bottom and perhaps the 38 fib I talked about. If it breaks above this level, then there could be a bigger uptrend continuation going on the dollar yen. 4-hour chart, or perhaps better, even daily chart, you can see if I put on a fib from here to here. All right, so let me correct this a bit. I think it's not. All right. Well, actually, this fib, I was using maybe a different fib last time. It seemed like it just missed the 38.2 fib a tad, but actually it hit it quite precisely, to be honest here. So if it breaks below that, breaks below 111.75, I think there could be a bigger retracement down to the 50 fib and the psychological round level of 110, which should be, together with the 50 fib and the moving average, a bouncing spot for upside, right? And who knows, that could be a big reversal back up with the uptrend. If it holds, if price respects this fib and goes sideways like this, there could be a break, of course, lower as I already said, but there could also be a break to the upside and already a bigger uptrend continuation at that moment. Aussie, basically, well, an uptrend, of course. Obviously, on the 4-hour chart, you can see that pretty clearly. 1-hour chart double top, but a lot of momentum to the upside. Daily chart, momentum to the upside. Big resistance spot, though, nearby. I'm not a big fan of the Aussie at this moment. It seems to be quite mixed sentiment here. Up, down, and I don't have a particular favorite at this moment. Maybe if it gets down to the S1, for instance, to test this bottom, and that could be a bouncing spot. If it breaks S1 and this bottom, there could be a move maybe to retest the S2, for instance, like this, and then bounce again. Or if it breaks this little correction, of course, like this, a breakout to the upside, and there would certainly have to be a break above the pivot point, a break probably, and a small little bull flag for upside. But I'm saying this with a lot of hesitation because I'm just not a big fan of the Aussie at this moment. I think just because it's so close to this big resistance, but also it has shown so much upside momentum, I would probably rather maybe wait for some clear bearish reaction or even a move up and a reaction at the R1, for instance, to see if it could bounce off of resistance. All right, thank you so much for watching this video. Hope to see you in the webinars. For more information, analysis, articles, check out atomarmarkets.com, and we wish you all great trading. Cheers.